Good morning, ARMR Insiders. Welcome to the morning meeting. Thanks for joining. Thanks for everybody starting their day with the ARMR report. Let's get ourselves set up, look at the day trading prospects, our investing standpoint, see if anything's changed and how we're going to manage capital today. So don't forget, I'm sharing with you my own personal journey. This is how I run my own personal capital. So whatever I say, you got to make sure it fits your risk tolerance, your goals, and all those types of things. But rest assured, what I share with you is actually what I do with my own personal capital. This journey that we're all on together really is a process of coming together as a group. I like to say we're an army of analysts followed up by a tank division of algorithms that I'm sharing with you so that we can manage risk and capture upside. That's what we're doing. Welcome to the new ARMR Insider. Thanks for joining. Glad you decided to join us. All right. Let me start by breaking down real quick the day trading picture, and then we'll talk about any changes to the investing picture. So yesterday, and I'll just show it to you real quick, we made some money long and short on the indexes. And so we'll just look at, this is our screen of where we day trade. I know most ARMR Insiders know this already, but I'm just sharing it real quick just to get you all on the same page. So there was not a lot of opportunity yesterday to make money, but we captured it on both sides of the ball, long and short, just to show you the S&P and the NASDAQ. But so right in here, the market opened kind of lazy, had that big reversal bar right in here. We talked about getting short. Now, I don't ever short the S&P. If I see a short opportunity in the S&P, I go over here and I get short the small caps and the NASDAQ, okay? So we had our short position on small caps, just a small profit right here. Same thing with the NASDAQ right in here, had a little gain right there. Then we had the double bottom setup right at the ARMR moving average, that orange line. And we got these 3-bar reversals. So just to put you all in, just to remind you all how we do this. We've got 5 different ARMR buy triggers. When we see one of these 5, we put money to work if we've seen at least an hour of selling. So what we do here on the desk, our bread and butter, is mean reversion trading. And in order to revert to the mean, you got to move away from the mean. So we put a short on early and made money on the movement away from the mean. Then we got this risk on entry point. And these were actually, there's 2 buy triggers at once that happened right here. It was a 3-bar reversal, as you can see, these 3 up bars in a row. And it was a close back above the first standard deviation below the VWAP. So that's a no-brainer place to put a trade on. Did the same thing with the NASDAQ. We captured this profit right in here, and the NASDAQ we captured. We didn't trade the small caps on the long side. We just traded the S&P. So I generally like to short the small caps and go long the big indexes, but sometimes I go long small caps. I could have done the small caps also, but I just used all my firepower on the big indexes yesterday. So, and then we exited right in here. We were booking profits right at the VWAP. So this black dot is the VWAP. So what we did was we had a small reversion back to the VWAP, booked our profits there. The S&P did a little bit better, reverted to the VWAP, but then kind of broke out above for a little bit. And on the reversal back below, this pretty clear 3-bar reversal back below key locations. This is a spot gamma location, so key gamma. And this was back below the VWAP. It was a no-brainer to exit. And we exited and the market sold off and closed on the lows. So we captured alpha once again. So these are the alpha capture trades we look for every day. And of course, just to remind you, what we're really looking for these days, right? Which was Friday when we, had a huge alpha capture day. So we captured all of that from the green bar all the way up to where we sold it on this bar right here, right? And those are the days we love. But honestly, if they come around once a week, that would be fantastic. They probably only come around 2 or 3 times a month. And you're going to capture, if you trade correctly, better than the 1% profit in the portfolio if you're putting the right amount of capital to work and trading correctly. So the object is to make sure we're there for the huge days and to keep all the other days, if we can, profitable. But there'll be some losses, there'll be some profits, and we're just kind of, chipping away until we get to that big day. Bang! You never know which day will be big, so you just put the capital to work following the strategy. I did want to say, so for investing, day trading 401, not a 101 class, but like a 401 class. I just want to remind you all that these trades, as you can see here, when we got long on Friday, they never challenged the stop. See that? We were buying Friday. The stop is the low of the bar we're buying. The ones that work never challenge the low of the bar you're buying. Even on a quiet day like yesterday, where we made money, but it was not a lot of money. It wasn't a huge move. We just got whatever was there. Even on this day, it never challenges the stop, right? Even on this day, never challenged the stop. Rallied up, made our money, right? So when you put a position on here, you put a position on. If it challenges the stop, and in this case, the stop was the low of the 3-bar reversal. So not the low of the bar we bought, but the low of the 3-bar reversal was the stop. Okay? If it were to challenge that level, I want you guys to know I will be going short. It happens so infrequently. The probability of success trading like this, which is to say an hour or more of selling away from the mean, one of the 5 reversal triggers that I share with you, put the trade on, make some money, whatever the market's willing to give you. Some days it's a lot, some days it's a tiny amount, and we book small profits, whatever. But there'll be some days when we put that trade on and it immediately reverses and takes us out. And I'm saying, if you're an aggressive trader and you can get your mind wrapped around this thought, because it's not easy, you literally take your loss and get short at the same time. Because what happens at that point is there's a statistically significant probability that the asset's going lower in the next 15 to 30 minutes. So you could, at the very least, make up whatever money you lost. And on some days, it just implodes and you have a huge up day on the short side. So I'll be doing that. I'll let you know if I'm doing that. I don't get frustrated or upset if I put a trade on and I get stopped out. It's just information. And if we use that information correctly, we can make money. So I'll be looking for that. Now, let's talk about investing. We had a really strong alpha day yesterday because of our focus on what I believe to be the commodity super cycle. I think that 2022, in retrospect, is going to show us that it was the year to own anything commodity related and everything commodity related. And it will create crazy alpha. It's created solid alpha for us so far for the year. And yesterday was just a sneak peek of what's going to happen if we really get this move in commodities that I think is coming. So the risk monitor's red, and yet we're 70% invested in an average portfolio that we manage. And the reason for that is we're highly focused in commodities, and commodities are not correlated to the NASDAQ 100 or the S&P 500. So the risk monitor is the manifestation of the 7 algorithms that we've written to help us manage our risk on the broader market, on growth stocks, on tech stocks, all the stuff I love investing in. Okay. So when that's red, I can't invest in any of that stuff. But energy, precious metals, base metals, agricultural commodities, I mean, all of these things respond to something else. They respond to an inflation picture that the Fed is way behind. The Fed has to catch up to it. Era's posted some charts the other day, and I'm going to go retweet them, Era's, if you don't mind. I'm going to tweet them out today because it's very important to see. When the Fed starts raising rates, the price of gold and silver goes up. Now, this is hard for people to wrap their head around because everybody on CNBC pretends different. I don't know why they pretend different because it's right there in the numbers. The dollar can go up and gold and silver go up as well. It's happened many times. But all you hear on Bloomberg and CNBC and all these other talking heads don't know what they're talking about. They love to like chew your ear off about, oh God, the dollar's up, so precious metals have to go down. It's just not true. And I don't know why people don't just bother looking at statistics. Okay. There are clear periods of time. The dollar can go up, precious metals go up. And it's during periods where inflation's getting out of control, the Fed's raising rates. Sometimes the dollar goes up because equity markets around the world are going down. Bond markets around the world are going down, and everybody is hiding in U.S. treasuries. In order to buy U.S. treasuries, you got to buy dollars. So you don't have to have a dollar collapse to see gold and silver go up. There's many scenarios. All right. So just don't worry yourself about, the comments on CNBC that are, always incorrect. Okay. So, we saw a lot of alpha yesterday, and I, was just showing you some of the charts, right? We're long BHP, right? We picked it up here. We booked a profit. It sold off double bottom at the 200-day, bought it back. It's starting to run. Valley, actually, we bought Valley this time, and it's really leading. So we bought that, as it was coming out above the 200-day right here. Okay, so we got the base metals. We own some rare earth right in here. Now, I mean, if you guys know MP, just to go over it real quick. So rare earth play in the U.S. Okay, and it's one of the favorite, for some reason, the short crowd. They love to come out with short reports that wreck the stock for a 24, 48-hour period. I personally think one of two things has happened. Short reports are normally a manipulation. Okay. So you can't take them at face value. You have to try to look behind the curtain and figure out who the little old man is that's trying to pull strings. So, typically there's two reasons these short hit pieces come out. Number one, there's a guy who's short and he knows he's in trouble and he can't locate the stock to buy back. So he gets a friend of his at a short report to write a bogus, hit piece. Stock goes down for a day and he buys a bunch of stock in to close his short out. I mean, I can't tell you how many times I've seen that, and I'll bend your ear, one day. Some of you have already heard this story, but when I first got into the business, I literally witnessed this through the Wall Street Journal, literally a placement of a story that was totally erroneous. I did the legwork and the research to talk to the people that were supposedly quoted in the story. They were not quoted in the story. It was a total lie. But the stock went down big. And then 3 months later, when you looked at the short interest in the stock, it collapsed on that day. You could see, you had to wait back then, you had to wait a month to get short information. So to see how many shares were short, it took a month to get data. And you could look back a month and say, oh, right when they made that short report, the guy who was short covered his entire short. And then 3 months later, the company had a huge earnings announcement. Stock was up 50%. Okay. So this happens all the time, and even more so in the world we live in. So when I see a short report come out on this company, and it's the same type of short report, which is it's totally worthless and already been refuted and not true, but it hits the stock, that's when you want to buy it. So it happened right here. Stock got whacked for 48 hours. Then the stock took off. And it happened right here. The gap down, really, it was almost the same short report. It was the same type of story. So, we're long right in here to see if it runs. Of course, we use stops. If it gets taken out, we get taken out, and that's the way it is. But anyway, had a really nice day in precious metals yesterday, and I don't like talking about it too much because they haven't even started to go up yet. We did add GDX to our ARMR portfolio too, which is a portfolio that doesn't buy individual stocks. It just buys ETFs and indexes. So we got that exposure right here. Right. And it hasn't even started yet. So again, I want to say to you guys, don't even talk to me about precious metals until they break out. I don't want to hear it. Right. And when they break out, we're just going to be cheering because we already own our position and we're not going to be chasing anything. So when it comes to the equity markets, nothing really changed yesterday. We're still risk monitor red. We're in a negative gamma environment. We're kind of in no man's land. I don't see the market going up a lot or down a lot here. I shouldn't say that. It's going to go up a lot or down a lot. I just don't know when. So right, what's happening is there's no way to get the risk monitor green right now. It's still red, and there's nothing for us to talk about there. So let's just move on to the last thought, which is our Our research department. I'm always researching. One of my favorite things to do is fundamental research. It's, how I got started in the business, covering conference calls, talking to management teams, looking at balance sheets and income statements, figuring out what stocks we want to own. I've been following Illumina literally for more than 20 years. I mean, literally, actually, in the late 90s, when I first came across the company, my dad and I met with the CEO at the time, Jay Flatley, and they had sold, this is a true story, 7 units into the market. 7. When he first came to our office, he'd sold 7 units, all to research facilities in the U.S. And their units, what they do is they, way back then, the human genome had just been mapped. So that was a big score. We actually owned a stock called Human Genome Sciences, which was mapping the human genome. The stock was, he made a lot of money in that stock, okay? But the real question is, how are we going to use the human genome mapping to create drugs, to, all this kinds of stuff. And the company that dominated that eventually was Illumina. And when we first looked at the stock, they had sold 7 units to 7 research facilities in the US. And that was probably, 1998 or something, 1999. We didn't buy the stock. I think it was 2001, maybe 2003, somewhere in there. They had seeded the market with enough units, and the consumable business exploded. This is a razor blade market, a business. Okay. So high margins on consumables. So let's fast forward to the story today. We've made money multiple times over the last 20 years. And really recently at the ARMR report, you guys were with me on both of these entry points. We picked it off right here and we made that score. And then we picked it off right here. We made money again, sold it on the gap down, right? So we had a trailed stop and it gapped below our stop. We got out. Now it's back down to the bottom of the channel. Hey, you remember that? You remember Human Genome Sciences, Brian? That was a huge stock, man. It was one of our greatest successes that year. It was just what a huge, came out of a huge rectangle. Remember that? I'm giving you all this backstory because I'm going to be on this stock every time I get an opportunity. Now, the caveat before I tell you all this is we have a lousy market. NASDAQ's going down. It's going to be very hard for a NASDAQ 100 stock to go up with the whole NASDAQ going down. Okay. So if the market continues to implode, I'll get stopped out of this trade. But should the market somehow hold up or be in a bear market, but not like a brutal collapsing bear market, maybe, I guess 2 out of 10 stocks go against the market, right? 8 out of 10 follow the market. So there's 2 out of 10. Maybe this is one of the 2. I'm willing to take a risk on this stock because I really understand the business. And more importantly, I've witnessed this over and over for the last 20 years. When they get into the next cycle, when they have a new product that drives consumable sales, when that starts, you start to get a ramping of revenue, ramping of earnings, margins expand, and that's when institutions love to buy the stock. So if you listen to the conference call, and we did this yesterday on the live trading desk, we listened to the call on the 10th of January, and you can see right here, the stock was up 17% that day. Okay. The reason the stock exploded is because management came out and raised guidance all over the place. And I mean, raised it in a significant way to the point where analysts were like, what's going on? Why are you doing that? And so the whole call was explaining what the CEO was seeing. Part of it is a new ramp of product that is a category killer, probably for PAC Biosciences. Okay, so a couple of years ago, PAC Biosciences, which was a favorite of Kathy Wood, the story was it's going to take over, Illumina's business. Illumina's dead. Okay, Illumina tried to take over PAC Bio, and they weren't allowed to by the FTC. And so the story was, PAC Bio is going to kill them. So here's the problem with that theory. There are the readers, which are the razors, are ubiquitous in the US. They're all Illumina, right? They own all of that real estate in all of the research centers and all the medical facilities, right? So it's like you have a Xerox copier. Maybe that's a better way to explain it instead of a razor. You have a Xerox copier. This is going way back to the 60s. Okay. But Xerox was a huge stock when it came out. You had a copy machine. You sold machines at a margin of who knows what the margins were, maybe 30 or 40% margin. And then you sold ink and paper at like 90% margins. Okay. And so the more Xeroxes in offices around the country, eventually Xerox hit this unbelievable wave of growth where the consumable business was just unreal. So think of it this way. Illumina's got Xerox copy machines all over the country and the world, and all over facilities, all over the place. And I'm supposed to believe that Pac Biosciences is going to go in and pitch these companies and say, hey, I know you have a Xerox. Here's another Xerox. Put it right next to it. Buy that and buy a whole bunch of new consumables. Versus Illumina saying, hey, that guy's got a good idea and we've created our own that we think is better, and you can use the copier that you already have. Right? It's a no-brainer, right? It's a no-brainer. So what the CEO said on that call was on the 10th, this is the year we're going to hit that ramp on new products that compete with PacBio, and our entire install base doesn't have to buy a PacBio machine. They can just use the machine they have. And that's just a killer for PacBio. Now, I'm not a short seller. I'm not going to go short PacBio. PacBio has good technology. Maybe someone else takes them over. I don't know. But the CEO of Illumina says, hey, guys, this is the year we're rolling it out. And not to get confusing, but in case you wanted the deep dive, there's, I wrote it down for you in the notes here, just so you understand the difference. There's long read and short read technology in this space of using the human genome and looking for drug discovery is basically what it is. Illumina has always been short read. Long read is supposed to be better. That's what PacBio was doing. And so now Illumina has both. Okay. On top of that, Illumina, they're in this fight over Grail. They've already taken over Grail, but the equivalent FTC in Europe doesn't want them to have it. And there's a big legal battle, whatever. So Grail's not really in the numbers. The company's raising guidance, not because of Grail, although Grail's doing well. But at some point out there's going to be a resolution. The stock will go up on that resolution. They're taking over Grail. It's done. And so now it's just probably a legal battle and whatever fees and fines and baloney. But at the end of the day, if you know what Grail is, and I wrote this down for you, it's literally the holy grail of medicine. It's the holy grail of medicine. That's why they call it Grail. And just to read, it's a multi-cancer early detection system. So you go to the drug, you go to the doctor once a year for your physical, blood test, EKG, all that kind of stuff. At some point, people are going to go to that physical and they're going to get a blood test, and you look for your HDLs and your LDLs, your cholesterol, all this kind of stuff. And on there is going to be, here are the 30 markers. And if you happen to have one of those markers, it's going to early detect a cancer, which you'll be able to treat so you won't die from cancer. I mean, it's literally the holy grail. It's the future of medicine. This is a killer story. So I intend to buy this stock in front of earnings on the 10th. Now, I never buy stocks in front of earnings. And if the market's collapsing, I guess I won't. But let's say the market's stable. It's the 8th right now. I'm trying to get into a day trade that makes me money. I'm hoping that I can get in a day trade and the stock pops in front of earnings to give me a cushion, just in case it goes down with a number. I'd be shocked. But the CEO said on the call last month that we'll be able to update this guidance and explain it more on our earnings announcement. So, I mean, I guess it's possible that they have a bad quarter, but how could that be? I mean, he's literally pre-announced blowout in earnings and revenue, and they're going to share more and explain more why they think they're raising numbers for the year. And they're going to do it in a couple days. If there's ever a time to buy a stock in front of earnings, that's it. Now, if the stock was already up huge, I'd say, no, of course I'm not going to do it. But the stock went up 17% on the news, and then the market got destroyed. And it's part of the NASDAQ 100. So it got wrecked right back down to the bottom of its base. And now they're going to remind everybody in 2 days why earnings should be blowout this year. I can't see how I can miss that opportunity. In a normal bull market, risk monitor green, positive gamma environment, there's no way aluminum would be trading down here. So I'm going to take my shot. I don't like buying things in front of earnings. It's a dangerous market. I totally understand if you don't want to join me. You got to figure out your own risk tolerance. Okay. Make sure it's a position size you can manage. I'll probably have a size on that I can double if I'm right. And if I'm wrong, it won't kill me. That's probably how I'm going to trade it. Have a piece on and be able to if it doesn't work, okay, I'll lose some money, but it's not going to be the end of the world. And if it does work, I've got a piece on right at the bottom, and I can add to my positions. So those are my thoughts today. I'm going to see you all on the live trading desk, ARMR Pro live trading desk at 9:15. I just got to set up the live feed. We'll go all day. Don't forget, now we go all day. I'll leave the screens on all day. We're sharing ideas all day. I'm sharing what I'm trading, but obviously any ARMR insider's got a thought. You can use the ARMR day trading tools. We can take a peek to see if it's a trade we can set up. All right. So I wish you all a great day. Stay nimble. And I would say, remember that to be successful investing on a long-term basis, you want to manage risk first and capture upside second. And that's what we try to do at the ARMR Report. All right. Have a good day, everybody.